Hi there, welcome to the Ecofina Financial Channel. My name is Philip, and as usual, I'll take you to something very important in the economy. Remember to click the subscribe button. What we discuss on this channel is majorly about finance, investment, and the economy. If that is your interest, then this is the channel you want to be logged onto. You would want to get regular updates from this channel. So click the subscribe button and we would be sure to get you the best of that. Today, we'll be looking at the dollar scarcity in Nigeria and how the situation is being compounded or aggravated by the depreciating or reducing uh, capital importation into Nigeria. So our focus will be on the first quarter of 2022 report released by the National Bureau of Statistics, which shows the capital importation into Nigeria. Just as a matter of making it clear, importation refers to foreign currency inflows into a country. So most countries, especially in Africa, depend on such inflows to help boost their economy and to help ease the liquidity in the foreign exchange market. Nigeria is no exception, especially considering the fact that Nigeria's economy is also highly import dependent. There's a lot of foreign exchange required to, do a lot of things in essence. So there's a high demand for foreign goods and services, which is also a reason why capital importation is such an important thing to the economy. Unfortunately, Nigeria is not able to generate that much foreign exchange from exports. So capital importation has to be what will make up the balance, which is why it's a very, very important. It's a very, very important statistics to look at. So, looking at the report released by the National Bureau of Statistics for the first quarter, there was a decline in capital importation into Nigeria for the first quarter of 2022. The decline was as much as 28.09% compared to the last quarter of 2021. So while in this first quarter of 2022, Nigeria got around $1.57 billion in capital importation. This is much lower than the $2.19 billion Nigeria received in the fourth quarter of 2021. If we compare it to the corresponding quarter in 2021, that's the first quarter of 2021, there was also a decline of 17.46%. In the first quarter of 2021, Nigeria actually received $1.9 billion in capital importation. So there are several reasons why the capital importation must have been declining or must have declined by that much. The global economy is also suffering a lot right now. Inflation is rising across countries. The Russia-Ukraine conflict has led to more or less like an inflation challenge. Energy prices are soaring all over, which means that even the companies who are looking to invest in emerging markets are going to be more cautious now. Investment is all about risk and return. And when the global economy is in a state where you cannot say it's stable, then it also affects the level of investments in other countries, which is probably one of the major reasons why there has been or why the capital importation for the first quarter of 2022 declined. But there are other reasons which are specific or particular to Nigeria, and that is the political risk. Remember, this involves anything that can be seen as bringing about instability as a result of a change in government. Now, Nigeria is in a state where the elections are coming up in 2022, in 2023, and of course, investors will start to you know, weigh their investments in the country. Do they really want to be in the country for a long time? How will the elections, how will the new government affect, whatever they invest in? So that is certainly a challenge. Another one is the security challenge, which of course investors also listen to the news and hear about some of the things that happen in the country, from banditry to kidnapping to such things. So such things are also some of the risk factors which will be weighed by companies looking to invest in Nigeria. But that's not all. The ease of repatriation of investments is also a critical factor. And right now, because Nigeria is having some serious challenges with foreign exchange, it's also a factor that any investor will consider. If they bring in their funds, how easy will it be for them to repatriate it back to their country when they need it? Because it's not as easy. There's a lot of demand for foreign exchange, and the Central Bank of Nigeria has been struggling to meet up with demand. Now, if anyone comes in and invests in Nigeria, he also has to join the queue when they need their money to take it back, which is also one of the major considerations for anyone looking to invest in Nigeria, and could also be a factor responsible for the decline in the capital importation into Nigeria. But and if we look critically at the data released by the National Bureau of Statistics and we break it down just to see what makes up the capital importation, you see that portfolio investments, which is investments in equities, in bonds, and money market instruments, that accounted for about 60.87% of all capital importation into Nigeria. Foreign direct investments, which we always talk about as being critical to growth, only makes up 9.85% of the entire capital importation in the first quarter. And when we look further down into that portfolio investment, you see that money market instruments dominate. They account for about 64.3%. And what it means is that money market instruments are short-term instruments, usually between 6 to 12 months. It means that many investors are still considering the risk in the Nigerian economy and would rather invest in short-term instruments which they can easily liquidate and take out. For any economy that is looking for development, we need any that's such an economy. We need a long-term investment, but that is not the case right now because money market instruments completely dominate. Bonds are next, which are still relatively, you know, they can be long term, but they can be liquidated anytime as well. They account for 32.38%, while equities account for just 3.32%. Equities means ownership in companies, ownership in businesses, and that is really low. By sector, banking and finance command the highest. 65% of all capital importation into Nigeria is into that space. It's no surprise. But what is a surprise, well, maybe not, is the oil and gas sector, which attracted just 0.04% of all investments. I think one of the issues many have with investing in that sector at the moment is that the Petroleum Industry Act, which was signed into law last year, has not been enforced, which means that things like subsidy are still there. So many foreign investors are looking at this and saying, do they really want to be a part of that? And maybe that's why there has been a decline. And in terms of countries where Nigeria's capital importation comes from, UK is by far the highest with 64.92%. South Africa is second with 7.47%, and United States account for 5.52%. 5.22%, sorry. So the capital importation into Nigeria will, of course, aggravate the FX situation in the country, and it's obvious because right now, dollar in the parallel market sells for more than 600 naira, and it shows that there's scarcity in terms of FX in the land. And it might have to be that way for some time, at least until the political risk subsides, and that will be sometime after the election next year, and when the global economy also rebounds, which of course we really don't know when that is going to be. So the scarcity situation, the dollar scarcity situation has to be, everyone has to see how they can manage it because it looks like something that is going to persist at least in the short term. So that's it on our edition. If you have any comments or any questions, you can ask in the comment section. I'll be back with you next time with another edition. See you then.